Welcome back. German Chancellor Angela Merkel facing a political setback this morning. Negotiations to form a coalition government broke down. The uncertainty rattling markets early. Things have stabilized, though. Actually, the European markets are higher right now across the board. Joining us right now with more is global investment specialist for JPMorgan Private Bank, Stephen Rees. Stephen, good to see you.
Great to see you.
What do you think about this coalition breakdown?
Yeah, I mean, obviously it's a disappointment. I think it's a slight negative for our positive call in Europe. But, take a look at what the markets are doing this morning. I think the markets are looking beyond this and focusing on the fact that the fundamentals in Europe are quite good. I think clearly it's a setback for Germany. We'll probably have elections next year, so that increases some of the uncertainty. But at the end of the day, the economic momentum and the earnings growth we're seeing in Europe, I think, still supports a pretty good year for European equities next year.
Stephen, looking ahead to 2018, markets globally have had just an amazing run in the last year. It's not just the United States, especially Europe. Do you think this momentum can be sustained in the next year?
Yeah, I do think the momentum continues. I think we all need to reset our expectations for 2018. I don't think we're going to have a repeat of 2017. And I think to some extent we probably pulled forward a bit of the returns that we'll get next year. But if you look at the drivers of the market, earnings growth, it still looks very good around the world. It's not just a U.S. story anymore. We're seeing better trends in Europe. We're seeing good trends in emerging markets. And so you should set your expectations next year. Where are the earnings growth going? And you need to think outside the box. You need to be a bit more global and not just rely on passive exposure in the U.S. to get your returns.
To that note, the Wall Street Journal has a really interesting story today about how the stock markets of developing economies have not kept up with their growth, while the stock markets of developed economies, whether it's the United States and Europe, have powered ahead, while the economies have been sluggish. And so that's got to kind of even out at some point. So do these developing nations
I think that's
look
right.
better?
There's always more skepticism in developing nations because people they've been burned in the past. They don't believe the growth. And so now that we're actually getting the growth come through, we're seeing stabilization in China and other parts of Latin America. You've set yourselves up for, we think, many years of strong earnings growth. And at the end of the day, it's really the earnings growth that drives equity markets, and that's what we're focused on for next year.
And to that point, Goldman Sachs came out with a note on late Friday. The bank's economists raised their growth forecast to 2.5% next year. They were talking about the U.S. largely. They're expecting the Federal Reserve to raise interest rates 4 times. That's how strong the economy they're expecting. Do you agree with that? That things are looking better than what we thought?
Things are looking better for sure. The JPMorgan Private Bank is at 2 to 3 rate hikes next year with bias to the upside. We shouldn't be scared of rate hikes. I think if we do get 4, it's going to be because the economy is performing well and wage growth is improving, and those are all positives for the stock market. So we're at 2 to 3 officially, and if we get 4, you better own financials.
Yeah.
We have another. Dagan mentioned one story in the Journal. We have another story today about H&A Investment, this big conglomerate that got overstretched in China, bought too many companies, took on too much debt. Talk about China more broadly. Is that the next shoe to drop in the global economy and global markets? They've had a huge run-up in debt, huge run-up in real estate prices. Now we see conglomerates getting themselves overstretched. Is that the surprise that's going to hit the markets next year?
We don't think the Chinese economy is the next shoe to drop. We don't see any massive imbalances. In fact, I think from an econ perspective, we're more comfortable with the outlook there than we've been in some time. I think from an equity perspective, you need to be careful. I mean, China's not an area where you want to step in and buy the index from current levels. You want to focus on the right companies and the right sectors and the right management team. So our focus on emerging markets is really with the best active managers that can sort of navigate the evolving situation.
I do a lot of work with investors and talking to folks out there. They seem to be concerned right now that we're at a bubble.
Yeah.
How do you talk to investors about that? Do you think it is?
I would ask them, where's the bubble? What's the bubble? Is our valuations that high?
Tech stocks?
Yeah.
Tech stocks have had a great year, but they're actually trading at a discount to the market. So I think people look at the levels and they think that we're at a bubble, but take a look at the valuations for even the largest companies out there. They're not expensive. I mean, clearly, you need to be more careful going forward in tech. We've seen M&A. You have to be more focused on specific subsectors, but we don't see the bubble in valuations that need to correct.
What about Bitcoin? That's had an amazing run.
Well, I don't think I need to comment too much on that. I think our company's done
David Diamond said enough.
I think we're focused on real fundamentals, real earnings growth. We see that in technology. I think it's going to be another good year for technology next year. And you want to be diversified.
Actually, Patrick Byrne is coming up from Overstock.com, and he was a proponent of Bitcoin, so we'll definitely get into Bitcoin with him. Stephen, it's good to see you.
Great to see you, as always.
Thank you so much.
Thank you.
We're happy you're back from
Yes.
Switzerland.
I am, yes. Good to be back.
All right. Stephen Rees, JPMorgan there. Still